resign soon. This is an urgent matter. Thank you.
Thank you very much for your testimony. And now, Dr. Randall Wray, you have 5 minutes.
Okay, thank you for the opportunity to speak here. In my statement, I argue that federal deficits and debt are not so scary. Neither is on an unsustainable path. Rather, persistent deficits and rising debt are normal. They're not due to out-of-control spending, now or in the future. They serve a useful public purpose. They're largely outside the control of Congress. And it's hard to imagine a scenario in which they create a financial crisis, lead to insolvency or high inflation, or trigger an attack by bond vigilantes. I want to focus on 2 graphs to back up these claims, and I don't know if these can be shown. Okay, there we go. Figure 1 shows sectoral balances. In the aggregate, spending equals income. One sector can run a surplus only if at least one other runs a deficit. The government sector is in red in this graph, and except for the Clinton years, it is always in deficit, below the line. The private sector is blue, including firms and households. It's almost always in surplus, except for the decade after 1996, when the private sector spent more than its income. The foreign sector is green and in surplus since the Reagan years. That's because we run a current account deficit reflected in our trade deficit. So the usual case is the government's deficit equals the sum of the private sector's surplus and the foreign surplus against us. This is an identity. You can't change one without changing at least one other balance. Those wanting to eliminate deficits have to tell us which of the other 2 balances will change to allow that to happen. Will they put the private sector in deficit? That's what happened in the dot-com and housing bubbles, leading to the global financial crisis. Or we'll get foreigners to run trade deficits? How? We've had a current account deficit for 40 years. Understanding sectoral balances shows why the federal balance is not under control of Congress, as it depends on the other 2 sectors. Finally, let's address the bond vigilantes and projections of exploding interest payments on the debt. Figure 11 shows debt service is driven by interest rates, not by the debt ratio. And interest rates are determined by monetary policy, not by the debt ratio, nor by bond vigilantes. So what do I recommend going forward? I actually agree with a lot of the comments made. We don't need tax hikes or spending constraint now, when growth seems to be moderating and there's no inflationary pressure. Indeed, doing that now might depress growth so that the deficit would actually increase, as it always does in recession. The time to rein in the deficit will be when growth booms and inflation threatens. I'm not saying all deficits are good and created equal. I prefer well-targeted taxes and spending. The recent tax cuts were inefficient because the main beneficiaries were high-income earners. This raised the deficit without boosting growth. It makes sense to shift taxes away from low to moderate incomes and onto high income and wealth. That raises consumption and encourages investment. Spending should be targeted to job creation and productivity increases. I don't take long-term projections very seriously. I remember when President Clinton projected budget surpluses for 15 years, retiring all the debt. The dot-com crash wiped out the surplus, and we've had deficits ever since. We at the Levy Institute warned in 1997 that that would happen. Current CBO projections have the debt ratio rising continuously. This is based on the twin erroneous assumptions that debt raises interest rates and lowers investment and growth through crowding out. That ignores positive impacts of deficits on the private sector surpluses. This doesn't crowd out spending, but increases net wealth and encourages growth. Instead of worrying about long-term projections that will be wrong, we should focus on formulating good policy today. So I suggest 3 recommendations. First, strengthen the automatic stabilizers. Spending should be more counter-cyclical, while taxes should be pro-cyclical. Policy changes weakened them over the past decades. Second, if discretionary policy is possible, raise taxes or cut spending only when the economy is overheating. There's no point adopting austerity today, only because the deficit might be bigger in the distant future. And finally, increase efficiency of both spending and taxing. The goal should be sustainable growth, rising living standards, reduction of inequality, and not to achieve some arbitrary deficit or debt number. Thank you.
Thank you very much for your testimony. And now recognize Dr. Bernstein for 5 minutes.
Chairman Yarmouth, Ranking Member Womack, I thank you for the chance to speak to this evolving area where economics...
Very good. Thank you, Mr. Chairman. I'll yield back.
Gentleman yields back. I now recognize the gentleman from Missouri, Mr. Smith, for 5 minutes.
Thank you, Mr. Chairman. As of today, it's been 219 days since the deadline has passed for us to propose a budget in this committee. While this committee might not realize it, there is several reasons why we go through the budget process. One, it gives guidelines to the appropriators. Two, in a budget resolution, we also set the 302A number allocations, which establishes the overall spending numbers. Yesterday on the floor, we saw a continuing resolution passed again, yet we still don't have the 302A numbers. I'm glad that this committee hearing at least is moving more towards a hearing that a budget committee would have when you're talking about the national debt. So I think that at least that's a step in the right direction, even though we're 219 days behind. Earlier this, I just want to make a comment in regards to what some of the witnesses had said earlier about good debt, investing in people. Mr. Bernstein made that statement. I think a lot of times folks up here in the swamp get confused and they think of government-funded, government spending, but it's not government-funded, it's not government spending, it's not government debt. It's taxpayer spending, taxpayer-funded, and taxpayer debt. So when we talk about debt, it's not government debt, it's taxpayer debt. It's every one of the 320 plus million Americans that have the debt. And let's not get blinded by a different entity by saying government, because it all has to be paid for someday, and it's all the citizens of this country. It's the taxpayers. So remember the difference between government debt and taxpayer debt. It is taxpayer debt. I know the Tax Cut and Jobs Act was brought up a couple times. I represent a congressional district that is one of the poorest.
In fiscal year 2001. These are programs to train people for the 21st skills of the future. But it only received $2.8 billion in funding for fiscal year 2019. So, Mr. Bernstein and Dr. Bacard, do you think the long-term economic and fiscal consequences of neglecting investments in critical areas such as education and skills training could be more damaging than the consequences of increasing our debt?
I'll start. I mean, I do worry about precisely that, and this is a good example
Anyway,
of what
just
I'm
wanted to
talking
correct that for the record. I now recognize the gentleman from South Carolina, Mr. Norman, for 5 minutes.
Thank you so much. Thank you for each of you for being here. Let me just reemphasize what Mr. Congressman Smith said. You know, when you say government debt, that is taxpayers' debt. This thing we call government is made up of taxpayers. They're the ones who put the money in the coffers to make government work. So that's not some term that's, I think it's misunderstood or misused by the left. Secondly, I've heard several talk about tax cuts for the rich, tax cut for those at the top. Where did the bonuses come that President Trump, that we passed, that President Trump has put into practice? Where did the bonuses go? It went to people that make up the corporations. So it's interesting that, you know, we talk about this, the thing government in terms as if it's not people. We talk about corporations, the rich. I think the people who have benefited the most are those that have a job now. I think the growth rates under the President Trump are real, as opposed to the obvious low growth rates under the previous administration, which hovered over 1.2, 1.5%. There is a reason people have jobs. There's a reason the growth has occurred in this economy like never before. Mr. Wray, let me ask you, have you ever run a private business?
No.
Okay, so you've never had to hire, make a payroll, balance, I guess other than your household budget, you never had to balance make a product or make sure things, you're making a profit so that you can pay the police, you can pay our schools, you can pay our first responders. You've never done that.
That's correct.
Okay. Let me ask you about the modern monetary theory, which I think you buy into. And I think the basis of that, tell me if I'm wrong, budget deficits can be financed by nations who control their currency.
Yes.
Okay. Are you familiar with the monetary policy of some Latin American economies, Chile?
Some Latin American countries, yes.
Okay. What about Peru?
Not Peru, no.
Okay. Are you familiar with some of the inflation rates? And I mentioned Chile. Do you remember what that is, the inflation rate in Chile?
No,
It's
I don't.
500%. Do you remember the inflation rate in Peru by just printing money? 7,000%. What about Venezuela? How's that worked out? That was 10,398%. So hyperinflation hurts the little man that you're talking about you protect. You know, in Venezuela today, we're witnessing the effects of a socialistic economy that doesn't work for the people that you say you protect. Those are the consequences of the very monetary policy that you say you promote. And I guess let me ask each one of you, I've got a minute 31, as you look at priorities in this country that we spend on, does the Green New Deal add up as the top priority? And I'd start with, well, Mr. Ray, let me start with you.
I do think that we face a very serious challenge that will require federal government involvement and federal government spending.
What would it cost?
It depends on what you include in the Green New Deal, say.
Pick a number. 'Cause
Okay, well, say the complete package of greening programs could be as much as 5% of GDP for the next 10 years.
Which is, give me a number. Just pick a number, because I've heard
Okay.
73 trillion, I've heard
No,
not that,
no.
but it's top of the list. Over national defense, over education.
I don't think that we have to make a choice like that. If we're talking about adding 5% of GDP to total spending, we don't have to eliminate defense. That would bring government spending up to about 25% of GDP.
Okay. Mr. Taylor?
I think the highest priority is to have a faster growing economy, which benefits large parts of this economy, and as you've emphasized.
Which is what the tax cuts have done.
I agree. They have been effective.
Right. I'm out of time. Thank you, Mr. Chairman.
Do either of the other two witnesses want to respond to the question? Dr. Blanchard?
The Green New Deal is indeed a priority. Is it the top priority? There are many other things which need to be repaired in this country, from bridges to other infrastructure. Should it be financed by debt or by taxes? I think the answer is by a mix of the two.
The only thing I'll add is when you're contemplating the cost of the Green New Deal or any other action against climate change, it's very important to factor in the costs of not doing anything about climate change. Those costs are becoming increasingly significant, and they must be netted out of whatever numbers we're throwing around.
Thank you. Gentleman's time has expired. I now recognize the gentleman from Tennessee, Mr. Cooper, for 5 minutes.
Their view of totalitarianism and very little regard for human lives, and I think that scared him. And with that, I'd like to know, China, of course, holds the most of our debt with 1.1 trillion. What are the economic impacts if these foreign countries decide to collect on that debt? I hear that a lot. Put it down on my level. I took first quarter economics for a good reason. I was asked to. So second time around, I was told to. So if y'all could, I'd appreciate every one of y'all giving your response.
I think we have to worry about China at various dimensions. That particular one, worries me less than some of the others, in the sense that if they were to want to sell the large amount of treasury bills and bonds that they have, they would make a very large capital loss on their holdings. I think that's sufficient reason not to want to do it from their own point of view. So I would not worry very much about the fact that China holds quite a large quantity of US government bonds.
Can I add, if you look at who are the holders of US government bonds abroad, and that's almost half of the debt we've been talking about, they are the exporters to the United States plus offshore banking centers. The way that they get the bonds is by selling output to us. We use dollars to buy it. They accumulate dollar reserves at the Fed, and then they convert those into US Treasuries. So as long as China and other exporting nations want to sell their goods to us, they're going to accumulate dollars, and they're going to very rationally convert those to US Treasuries. I think that any transition out of US government bonds is going to be very slow. China will eventually run a trade deficit. It's going to become too wealthy, its incomes are going to be too high to be the low-cost exporter in the world. Their population will buy more imports, and so that will reverse, but it's going to be very, very gradual. So I agree with Professor Blanchard. This is really not a worry.
Since I agree with Blanchard, let me just briefly say that if you owe the bank $100, they own you. If you owe bank them $1 million, you own them. That's kind of what Olivia was saying, and I share that view.
Yeah, I think we should be concerned because our debt is growing very rapidly, and many people are buying it. They won't always buy it. There is a risk, and that's not built into the usual forecast, but you can't ignore that. There could be a spiral up, and some people would say, no, that's enough. So I think it's a risk. I think the China is much more than that. I think they seem to be going back away from some of the market principles that made that economy so successful with Deng Xiaoping originally. I think the U.S. needs to be concerned about its own economy, its growth, its tax system, et cetera, and continue to stress that philosophy that we've had for many years and has worked. China seems to be going in the wrong direction. That's bad for them, bad for the world as well.
Thank you, Mr. Chairman. Thank you all very much for being here.
Gentleman yields back. Now recognize the gentleman from New York, Mr. Higgins, for 5 minutes.
Maybe you can help me understand that, but that would seem to be an area of bipartisan agreement.
Now, given that everyone testified that they thought interest rates would remain low for some time to come, I thought we had a sense of urgency to get to work on taking advantage of low interest rates. I feel less of that sense of urgency listening to you all. I sometimes think we need that sense of urgency. If interest rates were 5, 6, 7% on federal debt, I promise you we wouldn't be having the debt conversation we're having now. We've made it too easy. Dr. Wray, you've been the target of a lot of conservative attention, but that also makes you someone who can help me bring my colleagues with me to the center. What's your counsel?
Well, we have to remember that the debt ratio is a compound term. And if we increase GDP and if we get growth going, the debt ratio will come down in two ways. High growth increases tax revenue tremendously. It reduces some kinds of transfer payments, so total spending goes down. And second, so the deficit is smaller. And second, we're increasing the denominator. GDP is higher. And that's the best way to reduce the debt ratio. And that is typically what has happened in the past. Our debt ratio was 100% in World War II. And then it declined over the whole post-war period until relatively recently when it started going back up again to 80%.
I was looking through each of your written testimonies, looking for that dramatic change in productivity, women entering the workforce, all of those dramatic factors that led to economic growth over the past 50 years. I didn't see any of those transformative things, which have me worried about repeating that. Even at these high consumption, our debt is not fueling the investment we've talked about. It is fueling consumption. It is fueling transfer payments. Even at these levels, you believe that we can only deal with one side of the equation, which is growing GDP? Love to grow GDP. I just don't think I'm a growth guy. I can't do it by growth alone. I've got to have revenue. I've got to have reductions in spending. Do you disagree with that fundamentally?
I don't think we need reductions of spending, no.
Thank you, Mr. Chairman.
Gentleman's time has expired. I now recognize the gentleman from Virginia, Mr. Scott, for 5 minutes.
Thank you, Mr. Chairman. Dr. Bernstein, you mentioned the offsetting costs of climate change. What did you mean by that?
I could cite various studies that project the costs of climate change in terms of destruction of property, destruction of businesses, destruction of homes, but I don't have to cite studies. You can just open the newspaper. We see much more volatile weather that scientists tell you is related to climate change, droughts, fires. That's what I was referring to. If we're going to contemplate the cost of doing something about that on the budget side, we must net out the costs of not doing something about it, which are in the hundreds of billions, according to estimates I've seen.
Thank you. In terms of fiscal responsibility, they'd say we should run the federal budget like families run their budgets. Isn't it true that a fiscally responsible family will routinely go into debt buying a house, buying a car, and sending children to college? What are comparable good debt on the government's behalf?
I think the analogy that the government is like a family is extremely misguided in this regard. In fact, it goes the other way. When families are tightening their belts, say in a downturn, the federal government, which has the ability to borrow, and again, particularly at low rates, should be loosening their belts. So the idea that the federal government would contract when the private sector is contracting is a recipe for austerity, more specifically for more pain for the people least insulated from the pain, the most economically vulnerable families.
But families do go into debt for houses. That's not considered fiscally irresponsible.
No, I mean, I think that's a good example of the kinds of debt distinctions that I'm making. I mean, people will go into debt for a
International
college
rate
education.
over which we have very little control. What would happen?
Well, that's one of the reasons why I argue deficits matter, because we are exposed with a larger stock of debt to that kind of problem.
Gentleman's time has expired. Now recognize the gentleman from Oklahoma, Mr. Hearn, for 5 minutes.
Thank you, Mr. Chairman. I'm thankful today in the House Budget Committee that we're actually talking about taxpayer debt for the first time. I've been here a little over 1 year, and it's the first time we've talked about it. It's encouraging. But I'm also discouraged to hear that, that we don't think that deficits and debts matter when we talk about the modern monetary theory, and that countries that can print their own money can just take care of their issues, and we don't really have a responsibility. Last week, we had the opportunity to talk to the Fed Chairman, Jerome Powell, sitting in your seat, and I asked him specifically about the modern monetary theory. And he stated, quote, "The idea that countries that borrow in their own currency can't get into trouble is just wrong. And the idea that debt does not matter is also wrong," end quote. Additionally, we have more than 40 leading economists were asked whether they agree with the underlying tenets of modern monetary theory by the University of Chicago's Booth School of Business. 100% of the respondents disagreed or strongly disagree with the economic principle. I don't believe that members of Congress are naive enough to believe in MMT as a way of servicing our debt. I believe that this is just a way to justify their multi-trillion-dollar wish list. They simply cannot face up to the reality that their free proposals like the Green New Deal, Medicare for All, the Green Housing Deal are not at all free. When asked about how to pay for these programs, they can't give a straight answer. Some just argue that we will. Some settle on the convenient MMT. This is not realistic. The Green New Deal, Medicare for All, and the Green Housing Deal are not realistic, and our kids and grandkids will pay the price tag. By pretending that we can afford these outrageous proposals, we're indebting our future generations to pay for them all. We've all talked about the 2017 Tax Cut and Jobs Act of being just so destroying of our economy. Would you all agree that this year we'll have the highest revenues in the history of this country?
Not nearly as a share of GDP, which in my view is the right way to measure it.
But from a pure dollar standpoint, we'll have the highest revenues ever in the history of this country. Is that correct? It's a yes or no. I mean, it's not hard. You guys are economists, all doctorates, the last time I checked.
That statement is probably true every quarter in our history, except when we're in recession. The relevant measure is as a share of GDP. I mean, this is not a partisan statement. This is a CBO view. And as a share of GDP, we're collecting 16.3% of revenues in FY19. That's a historical low point.
So, you know what, I've been here 1 year, what I would tell you that no matter what the revenue is, that we'll figure out how to spend it. I mean, would you agree with that as well? Okay, good. We got a yes or no on that one for sure. Yes, we will figure out how to spend it. There is no sense of fiscal accountability in this House. And so to say that it's wrong to put a little bit of money back in the people's pocket, because I will tell you, back in the hinterland, when you get out of the Beltway, they don't believe we can control any kind of spending. And to put money back in their pocket is not wrong, because they don't just go bury it in their backyard, contrary to what you'd like to make everybody believe. They go spend it in their economies, their local economies, which pay taxes to fund their schools, to fund their roads, to fund everything else in their area, not dependent upon the federal government. Those are just facts. You can agree or disagree, but those are facts. You know, as we go forward here, I like what you said, Mr. Bernstein, about we have good debt and bad debt. In fact, I introduced a pro-growth budgeting act 2 weeks ago. It will never see the light of day because, contrary to popular belief, most people here don't believe that you actually invest using debt. And when we talk to the ordinary people in the world, the people that are not in this room, except for our guests, appreciate our guests being here, but those of us that are here talking at each other, when you talk about debt, you have some reasonable expectation of paying it back. That does not occur in Congress. You borrow money and you never pay it back. It's only been paid back 4 times in 4 years in a row, 97, 8, 9, and 2000. In 2001, a little bit. But since then, we've been running deficits every year, which means we're not paying down any debt. So we have a different definition of debt in this world up here. So I'd encourage you to look at that and give me your thoughts, because it says if we spend $1 or borrow $1, it's being borrowed and spent to actually grow the economy. I would encourage you to look at it. It's got a lot of reviews. A lot of people signed on to it. Not members of Congress, but a lot of people signed on to it. So anyway, I'd like to take a look at that. You know, as we go forward here, I'd like to talk about the Green New Deal, Mr. Wray. If it's not 93 trillion or 83 trillion, what is the number that we're talking about? Because it's getting used a lot around here. I know you guys, you see this and you hear about it and it's in the press, but in our hearings, every committee, 22 committees, has some component of a conversation of Green New Deal. Can you give me just your best guesstimate of what that's going to cost? Net. I get it, you know, you're going to save money and all that stuff, Mr. Taylor and others, but what is that number?
As I said, it depends on what you include in the Green New Deal, and it could be about 5% of GDP.
So only $100 billion a year? Is that what you're saying? Is that roughly? Wow. $1 trillion a year. $1 trillion a year. So trillion versus 9 trillion. That's a big difference. I mean, because up until now, I've not really heard many people argue the 9.3 trillion a year number.
Yes.
That. So
I have looked at the 93 trillion number, which is an outlier, and they don't count reduction of spending on, say, the destructive activities.
So you're saying that the 8.3 trillion is what we would save versus spending only a net trillion. That's, man, I don't know, that's a pretty good return.
Well, as I said, that was an outlier.
Yeah.
Other estimates are nowhere near that number.
Obviously, we don't have 20 minutes to ask questions. Mr. Chairman, I thank you for your
I always
indulgence.
enjoy giving you more time.
No, thank you, Mr. Chairman. I really appreciate it. Thank the witnesses for being here.
Gentleman's time has expired. Now recognize the gentleman. Gentleman's time has expired. Now recognize the gentleman from Texas, Mr. Crenshaw, for 5 minutes. Oh, I'm sorry, no, the gentleman from Ohio, Mr. Johnson, for 5 minutes.
Thank you, Mr. Chairman, and I'm really enjoying these. Thanks to the witnesses, by the way, for being here. I'm enjoying these conversations today. You know, we're talking about the unsustainability of the federal debt, and yet this committee that is responsible for producing a budget to address our spending has not done one. So, Mr. Chairman, I'm going to submit to you that we got to get back on track on this committee and produce a budget. That's our primary responsibility. You know, the federal debt is an unsustainable
trajectory. We all know that. The current debt burden on every American is $70,000. Within 3 decades, CBO says that it's going to be around $248,000 per American, or almost $1 million for a family of 4. So mandatory spending, including interest payments on the debt, is projected to increase from $3.1 trillion in fiscal year 19 to $5.3 trillion in fiscal year 29. This is a $2.2 trillion or 71% increase. So, Mr. Taylor, do you believe we should be focused on stabilizing current important programs such as Social Security and Medicare, which we know those are part of the mandatory spending that's driving the debt, right? So that we can make sure that they are preserved and strengthened? Or should we focus on expanding these programs and creating a bunch of new programs on top of them?
I think the most important thing is to stabilize in the sense of have them not growing faster than GDP. And that requires reform, and that requires projections, and I think they will work better in that case. I think there could be more focus on this committee, other committees of Congress, on finding ways to reform those programs. That's what I would focus on. They are crowding out other things that have been mentioned already in this room. And then once that is determined, that's the job of our society, our democracy, to determine that, then figure out about the financing. And there are reasons why sometimes you have deficits and sometimes you have surpluses. Economists have wrote about that all the time. But I think the main thing is what should be the spending priorities. And I believe now that it's the so-called entitlements are growing too rapidly. Many people have thought that the same, so figure a way to reform that. There are proposals out there, and that's the way I would go about it.
Yeah, and use that ugly word, entitlements, because I can tell you the people where I live, where I represent, my 80-something-year-old mother, before she passed away, they hate that word entitlements because they invested in those programs. They view those programs as responsibilities of the federal government, and we've let them down by not doing budgets, by not managing the spending so that we protect those programs. You know, interest payments on the debt are already high and are projected to grow. This year, interest on the debt is projected to be $390 billion. By 29, it will more than double to $807 billion. Under CBO's longer-range forecast, interest on the debt will rise to 29% of federal revenue by 2049. So again, Mr. Taylor, are you concerned that an ever-rising federal debt and its associated interest payments will crowd out other important federal spending priorities, such as defense, research, health care, and meeting our obligations that American people have paid into?
Absolutely, I am concerned. That's why I focused in my testimony of the costs of doing that. I think it's a cost to the economy. CBO agrees it's a long-term cost. I think it's also a short-term cost, and would encourage CBO to adjust their analysis to capture that as well. But it's fundamental. It's really the most important thing. That I look at the budget, I don't know why it's going in the direction it's going, need to change it, need to make it more sense from an economic perspective.
Okay, in my last 30 seconds, you know, some would say that modern monetary theory simply says that Americans shouldn't worry about how much we spend because the dollar is the currency of the world, and because America owns the dollar, we just print it when we want it. So my question to you is, do you worry that implementing this kind of philosophy, the MMT, could cause a loss of confidence in U.S. financial markets?
Yeah, I'm worried about it for a number of reasons. It's really going back to policies that we know haven't worked in the U.S. I gave my example of the 1970s, but it's going back to countries which have not been successful. It's high inflation. I would like to see at least somebody run through particular proposals that are along these lines with some models, with the CBO models, so there can be some at least discussion about it. But right now, it seems to me it's going back to policies which we know in history have not worked.
Thank you, Mr. Chairman. I yield back.
Gentleman's time has expired. Now recognize the gentlewoman from Illinois, Ms. Tchaikovsky, for 5 minutes.
Thank you so much. I wanted to go back to climate for a minute. I think it's perhaps the greatest challenge facing the 21st century. We have just, it's estimated 11 years to cut emissions by 45%, have to achieve carbon neutrality by 2050 to stop
doing,
temperatures from
enough.
rising. Yes, Dr. Blanchard?
There is a marvelous cartoon. It takes place in 2050. The world has become inhabitable. But there is an old man who talks to a young man, and he says, yes, it is inhabitable, but look, we've reduced the debt. I think that's a very deep...
Bad choice.
It is clear that we need to do something about global warming, that the cost will be high. The question, I think, is not whether it should be done. It should be done. The question is how much should be financed through taxation, additional taxation, and how much should be financed by debt. I don't think there's a simple 0-1 answer to that. Some of it can be financed by debt, but to a large extent, what we do to fight global warming has very large social returns, but very low financial returns to the state. And therefore, if it's all financed by debt, it will complicate life later for the state. So I think it's a mix, but there's no question that we should be doing it, and partly finance it by tax and partly financing by debt. The part which would be financed by debt would be called, I think, by Jared, good debt. This is debt to improve the future.
Dr. Wray?
Yeah, can I add? Look, according to the scientists, and I'm not one of those, we have the technical know-how, okay? So the question is, can we release the resources from current uses, plus put unemployed resources to work to tackle climate change? And I think the answer is clearly yes. If it's 5% of GDP, and use that as a measure of the resources we need, this is absolutely doable. Think about what we did in World War II. We had to move 50% of the nation's production to fight the war. We did it. The debt ratio went to 100%. The deficit reached as high as 25%. We managed to keep inflation below 10% at the peak, and most of the years much below that. We can, if necessary, I completely agree with Professor Blanchard, we may find we're going to need a tax increase, or we may find that we need to postpone some consumption, to ask the workers to make a sacrifice for 10 years in order to enact what we need to do to turn around this trajectory of annihilation. And we'll reward you later. That's what we did in World War II. We gave benefits, Social Security, retirement, health care, all those things were promised at the end of the war. Workers got them. How did we come out of that experience with a 100% debt ratio? The golden age of US capitalism. That's what we got from that.
Thank you. I yield back.
Gentleman's time has expired. Now recognize the gentleman's time has expired. Now recognize the ranking member for 10 minutes.
And we're into the lunch hour, which is never a good thing for the two of us who have a few minutes of questions. First of all, thanks to the witnesses here today. Going to come full circle and just ask each of them. We kind of started this way. I want to go back because there's been a lot said. Does debt matter? From the perspective of the United States taxpayer who may be watching this hearing or hearing about it, to each of my panelists today, does the federal debt matter? Dr. Blanchard.
That absolutely matters.
Dr. Wray.
That was a but I didn't give you time.
We may come back to the but.
Yes, but probably not in the way you're implying.
You said but and kept going, and I wouldn't let Dr. Blanchard do it.
Yes.
Yes. Okay, well, I'm glad to hear that. My dad always said, don't go into debt. He's a very successful businessman. Don't go into debt for things that are not an appreciating asset. Pretty sage advice, don't you think? Yes. Do I get any pushback from the?
No, you said my but.
Yeah, okay. And I think he's right. And by the way, he operates a business today and has no debt, and has an extremely healthy business. There have been some discussions here today about whether the family household budget that most of our constituents have a context on versus the federal budget, and whether they should operate similarly when it regards debt. Now, the household budget does not have to provide for the national defense. It's not in their Constitution. It's in our Constitution. It's in the Constitution that we're responsible for up here. But in terms of going into debt for purposes of investment, growth in the economy, those kinds of things, the principles, though, between the household and the federal budget are still similar in nature. Would you not agree?
I would not agree. The public debt, the government debt, plays a macro stabilization role that individual debt does not. So when the government decreases its debt or has a large surplus, this has an adverse effect on the economy, which it has to take into account. This is irrelevant to you or me or any household.
Dr. Wray, I saw a negative response from you.
Right, because when you're looking at it from the point of view of the individual in the private sector, whether household or firm, at some point, yes, they need to repay their debt. The private sector taken as a whole never repays all of the debt. It grows over time in the same way that the federal government's debt grows over time. It's been growing since 1791. It's been growing as relative to GDP since 1791. It will continue to grow. So will the private sector's total debt. So you can't look at it from the point of view of the individual in the private sector. Look at the private sector as a whole. Their debt grows over time too.
All right, Dr. Bernstein?
Just as I said earlier, I think this idea that when the household is tightening their belt, the government actually needs to go in the other direction. So I'm afraid I disagree as well.
Dr. Taylor?
Just to be sure, I think these so-called automatic stabilizers are good. It's been the economy's in a boom, revenues increase and spending increases, and I think in a slump it goes the other way.
Well, I guess here's where I'm going with it, and that is that unlike the federal government, for the American household, there are consequences for going into too much debt to the extent where you do not have the capacity to repay. And there are many examples of that. Student loan debt, I think, is a real good poster child for it, because there's a lot of people that went into student loan debt with the purpose of improving their earnings potential when, in fact, they didn't improve their earnings potential. In fact, a quarter of that student loan debt is not even, did not even lead to a college degree. So I think it was purpose defeating in that regard. But there are consequences for my constituents for going into too much debt and not having the capacity to repay, as opposed to the U.S. government. Which leads me to this question. If we agree that debt does matter, and it's just a discussion about the type of debt, bad debt versus good debt, and if the premise that the government should have the capacity to repay, and I'm not talking about just minimum payment due, just the net interest on the debt, but I mean start whacking away at the long-term structural challenges. If that is true, then the lack of the congressional process that this guy and I worked on, in addition to Mr. Woodall, to develop a budget of the United States government and to be able to put before the American people what our fiscal condition is and to begin to make those prioritized decisions, discretionary versus non-discretionary, and or the mandatory side, and remember, those mandatory programs are on autopilot, so unless the Congress acts, they continue to go completely unchecked. And it becomes a demographic challenge for the country that are moving those costs higher, in addition to healthcare spending that Dr. Bernstein, you talked about. So would you agree with me that part of the problem that Congress has is it is not honoring the process that is designed to be able to put the spotlight on the fiscal condition of our country in such a way that we can begin to make those established priorities. And again, not at the risk of using the word poster child again, let me remind you, yesterday we passed a continuing resolution. We are almost 8 weeks into the fiscal year. We don't have a budget, and we pushed the spending of the country again to the 20th of December, to Christmas, and we'll probably do it again, and maybe 2 or 3 more times, is the lack of the execution of our process or a better process contributing to the problems that we're facing today? Dr. Blanchard.
I would not think of myself as an expert on these issues, but yes, from where I stand at a distance, it looks like the congressional budget process is not ideal and could be substantially improved.
Dr. Wray? Or does the process matter?
Look, capacity to repay, I'm not sure what that would mean for a federal government that is an ongoing concern, that has only repaid its debt one time, 1837, followed by our first depression. We do not have to repay the debt. What we have to do is make the interest payments. That's what we need to do.
All right, well, all right, so let me hit pause here a minute and just focus on interest payments for just a moment. Today, as evidenced by one of the, a couple of our members have indicated that the net interest on the debt this year with very low interest rates is going to be somewhere in the neighborhood of $400 billion, which is more than half of what we spend on our constitutional challenge to provide for the common defense of the country. And there's been the term crowding out used many times here today. We are crowding out the investments that you gentlemen are suggesting that we continue to make to grow our economy, help vulnerable Americans. The things that we would normally spend that money on, we're spending on the net interest on the debt. That's money that could be being spent elsewhere, which I think makes my point that deficits and debt do matter, because it is crowding out the available money that we have to be able to effectively fund the discretionary budget of the U.S. government.
Well, I mean, you put that constraint on yourselves, and I understand your political dilemma here. Interest payments, I think all three of us agree, are a very inefficient kind of spending. First, half of it's going abroad, okay, and the other half is going into the United States, but it doesn't tend to go where you want it to go. It doesn't tend to lead to economic growth. So I'm not advocating trying to ramp up interest payments. Crowding out theory, there are two approaches, one loanable funds, the other is ISLM. The evidence just does not show that there's crowding out. Now, it may crowd out your spending because you put constraints on the budgeting process. It doesn't crowd out in the real world by raising interest rates and reducing investment. All that government spending goes somewhere into the economy, and it creates net income for the private sector, which should encourage investment rather than discouraging investment.
So the constraints that you suggest that we put on ourselves are only there for one reason, and that is not to explode this deficit and debt situation even further, exacerbate the situation as we currently have, which most people would agree is already beyond any capacity for us to be able to repay, and it's just going to lead to further complications in taxes for future generations. Dr. Bernstein, real quickly, a thought from you, and then I'll come to
just
Dr.
on the process point, because what you said resonates with me. I'm going to be straight with you about that, about the broken process. But I immediately went back to, I believe it was 2011, and the balanced budget agreement that, you know, created this so-called super committee. I view that as being, you know, just a huge process failure. So
That was 2011.
Yeah, 2011.
Not our joint select committee.
No, I'm just saying.
Okay, all right.
I say that I think the problems go deeper than process. I agree with you the process is broken, but I think there are fundamental differences about the kinds of investments that we're arguing about today, good versus bad, about the amount of revenues that we need to collect. And I feel like before we can have a reasonable process, we probably have to talk more about those differences.
Dr. Taylor.
So I think going back to regular order would be tremendous. Budgets comes from the president, the budget committees go through it, the appropriations, and you got a budget by October 1st. It would just be so clear to people compared to what's happening now. This is a democracy, people are supposed to be somewhat informed. It would improve the process greatly. I would encourage you to try to do that.
Okay, and I've just got one final question, and it's related to our process because our committee, which I think did extraordinary work, we came up a little bit short, but not because we didn't really work hard at it, because we spent a year doing it. But the one thing that I think we kind of rallied behind was regarding debt is some kind of a target. We've talked about it already today, debt to GDP, which I believe, I've given up hope that we're going to balance the books of the federal government. It's certainly not in the time frame I'm going to be here, but at some point in time, should this country not have a reasonable target of debt to GDP. Pick the number. I don't know if it's 42, the historical average, or if it's 65, or use whatever that number is, but some kind of a target so that we can at least begin to somewhat conduct ourselves as people who can constrain the absolute growth of federal government, which can go out of sight if you don't. Real quickly, from left to right.
I think that the issue is that we really do not have a good sense of what the debt target is. And choosing a number comes with dangers of trying to do something which may not be quite the right thing. So I'm with you in spirit. I would have a very hard time deciding what the number should be.
Dr. Wray.
Absolutely agree. I can't see any, I think you should focus on the things that are important. Okay, employment, rising income, economic growth, rising productivity, meeting the challenges that face us in the future.
Dr. Bernstein.
Yeah, I would urge you to think about debt much more dynamically. Imagine we had a debt target in World War II, and we didn't gear up to fight that existential battle. I'm sure you would be opposed to that. So I don't think targets are a good idea.
Okay, Dr. Taylor.
I think targets are a good idea with emergency clauses to deal with this.
Amen. I yield back my time. Thanks for allowing me to go over.
Absolutely.
And congratulations on Louisville being number 2,
Thank you.
by the way.
We're loaded. People need to look out for us. I yield myself 10 minutes. Thanks
We've had
again
this
to all the
conversation
witnesses
a
for
lot.
being here. Right.
I just want to say,
Yeah, Dr.
so there were several references to MMT, and they all seem to equate it to printing money. That is not MMT. We describe the way the government actually spends. I think what they have in mind is something much closer to quantitative easing, in which the Fed spent $3-4 trillion buying assets, essentially by crediting bank accounts with reserves. That is nothing like what MMT is recommending. We are asking you to look at government debt deficits in a different way, to take account of sectoral balances. If you're going to reduce the budget deficit, we need to know which one of those other 2 sectoral balances is going to change. Are we going to be reducing the private sector's surplus? Are we going to make the private sector run deficits? Are we going to somehow get the trading partners to decide not to sell stuff to the United States? Something has to happen. You can't just raise the tax rate and think that you're going to balance the budget, or reduce government spending and think you're going to balance the budget, because one of those other 2 sectors, or both of them, has to change what they're doing. And cutting health costs is cutting GDP. Cutting government spending is reducing the injection of government spending into the economy. Reducing the amount of debt that is issued is also reducing the net financial assets that are being accumulated by the private sector. That's going to have some kind of consequences for the private sector. So we need to look at both sides of the equation of government spending, but also of government debt, which is held as an asset, the safest asset in the world. The world wants more of it. So why are we so worried about giving the world what they want? The last thing on the robots taking away all our jobs, as Professor Blanchard said, this has been going on for 200 years. It's usually a good thing. I think it probably will continue to be a good thing. But what should the government do about this? We do need training. We do need education. Because robots are pretty good at taking away the jobs of the lower skilled and lower educated workers. They're some way off from taking away our jobs. Maybe someday that will happen, but we need to worry about the people at the bottom end that will be replaced probably pretty quickly. We need to educate them. I don't like the idea of a basic income guarantee, or just telling people, look, sorry, in the modern economy, there's nothing that you can do. No, we have to find jobs for these people, and we need to train them for jobs.
I thank you for that. And, I'll go to Dr. Blanchard first.
Looking at my notes, at 2 points. The first one is a nerdy one, which is that if you look at interest rates and debt, it's true that interest rates have decreased while debt was increasing. To conclude from this that therefore there is no effect of debt on interest rates would be wrong. This would be mixing correlation and causality. I think what has happened is many other factors have led to a decrease in interest rates, which have nothing to do with that. It may well be that that still has a positive effect on rates. It just is hard to see because of all the other things which have happened.